we're going to walk through the same process. So what we're going to do is I just show you the this week analysis again, right? Then I just explain to you the thought process of how to use it and how I analyze the market. Okay, normally you receive this, right? The first thing is we always put is technical analysis, but don't worry about looking at this first, because what you want to do is you want to understand what is the fundamental directional bias. Okay, and the directional bias, I think Jess also asked me today, right? She looked at the central bank, but instead of looking at central bank, what we want to do is actually look at the weekly one, because the central bank, they only release on a monthly basis. Right, which we walked through during the 2 days workshop. We walked through one of the central bank monetary policy. They only release on a monthly basis. So it can change when there's an update in terms of how the economy is performing. Right? So this is an updated version based on a weekly basis. So this is actually more accurate in terms of deciding the fundamental bias. Okay? So straight away from this, it can give you a slight hint as to what are the different strength of different currency. For example, the best currency to match is actually the bullish one and the bearish one, because it becomes a very clear direction. But you realize that at times there will be also neutral. Neutral doesn't mean that it's that means it's not okay. Neutral, why I put there is simply it means that it's unclear, right? Meaning it's both sides. So what you need to do in neutral is you want to have more data sets, meaning you want to closely monitor what is going to happen in this particular week. Okay, so for example, like Euro is neutral. Then I dropped some remarks as to why I came up with that decision. Right, like for example, last week data is mixed. Alright, some are better, some are not so good. Right, GDP was bad, but German data was better than that. So it's mixed. The other thing is overall, why I can say this while we are seeing some signs of recovery in the Eurozone, right? Why I can say this is because I've been monitoring it for some time, right? So if you just started off right now like this, you might not come up with all this statement. But that's the reason why you need to be consistently on the ball with the market. You cannot say like, this week I just don't feel like doing it. Then next week you come back in. You need to catch up on what had happened this week. Right, the worst thing you can do is 1 month later you come back and then you don't do any research as to what you have missed in the market, and then you go and start trading. Right. Then of course pound wise is bearish simply because there are some of the data coming in that is missed. Okay, but if you realize last week we actually have a BOE monetary policy statement. Okay, that was updated last week. So I also updated the central bank report. It was slightly hawkish, but over there's a concern over Brexit, right? And Brexit is something that is not reflected in the economic calendar, right? But it's important because how this is gonna, whether UK at the end is gonna exit Eurozone is definitely gonna impact UK, right? And what the BOE chairman Carnley, alright, what he said is that if UK is gonna exit Eurozone, highly likely there's gonna be a recession. Right, so things like this is definitely gonna affect the pound, right? And all this contribute to pound being bearish. Okay, because when the economy goes into recession, then that's where your currency becomes very weak. Right, and then of course there are some like Japanese is mixed, alright, again neutral, right? Because last week there isn't any new data, but the fundamental of I never include franc here, but the fundamental and the nature of Japanese yen and franc is usually weak. Okay, they only become strong when there is a risk-off environment. So it's a very sentiment play kind of currency. When the financial market is uncertain, people do not want to take risks. Money normally flow into Japanese and Swiss franc. Okay, so that's where so this is where it's neutral right now, and fundamentals of Japan remain weak. Right, but what you want to take note is because this week we have the GDP release, okay, and you want to take note of that because that GDP can easily shift a neutral stand to either bullish or bearish. Okay, then of course we also look into USD being slightly bearish. Okay, the reason why I put slightly bullish here is because last Friday the core retail sales actually came in way better, and if you look at historical data, it's actually higher since June. Okay, but the idea here is this slight positive, that means one data that comes in positive, will not change the fact that the Fed will suddenly increase interest rate, because they don't only look at one data set, but they need to look at a consistent increment in overall economy. Okay, so that's why I say over here that even though there's a positive sentiment from last week retail sales, we do not expect this to impact their rate hike decision in June. Right, that means my expectation is that it might continue slightly bullish, but it wouldn't turn the entire direction from for USD itself. Okay, so what I mean is that this week we can still ride on USD being slightly bullish. Right? Then, for example, Aussie is definitely very bearish still because of rate cut. Okay, NZD is neutral. Why I came up with this neutral is because you need to understand a little bit more. You need to read the central bank report, because if you don't read that, basically you won't possibly have all this information, right? Because in the report, right, the comments from Wheeler, which is the chairman, okay, he said that on Wednesday that his comment actually reduced the likelihood that there's another rate cut, because what they are doing now is they are monitoring housing prices and they fear that there's a bubble in that. So what they're going to do is they're not going to do another rate cut, because when they cut rate, people has the cost of borrowing become lower. People will then borrow and buy houses again, then the bubble will burst. So that affected in such a way that the rate cut will not be happening anytime near. Right, and then the last currency is Canadian. So Canadian is going to continue riding on this bullish sentiment, because last week there's no news, and if you look at COT as well as the oil prices, both are being supported. Right, so all this comes with the understanding of what's happening in the economy. Right, and of course this part is again where you need to take note of what are some of the important data for this week. Okay, so you realize all the important data are regarding inflation as well as employment. Right, for example, CPI is inflation, employment is about climate count change. This is equivalent to NFP for the UK. Okay, GDP definitely very important, because that's the overall economic growth. Okay, right? Okay, New Zealand GDT price index over here, they are referring to your daily goods product. Right, and we shared that New Zealand, you need to track their daily goods, for example, milk. Okay, so a positive one will be positive for New Zealand, negative one will be negative for New Zealand. Okay, so all these things you need to take note, and this is where the risk COT comes in. Okay, so with just this quick graph, right, you can see which net position has increased or decreased. Right, so for example, Euro has changed from more negative to less negative, similar for pound. Okay, but this chart, though it shows you that, it doesn't show you whether this change, for example, we take pound, right, from more negative to less negative, it doesn't show you whether people are exiting their short position or are they adding into long position. Okay, I repeat again, because there are two things that can affect the overall net. One is people buy more, right? Therefore, it increases the long position. The second scenario is people exit their short position. Therefore, they exit from their short, and therefore they help to decrease that negativity.
But the decrease the short doesn't mean that it will increase the long.
Doesn't mean. But your net will also be reflected. Yeah, because the net is a summation of total long and total short. Right, so that's where, for example, if we take pound, right, you go down to this one, that's where you can see which one is contributing more to that increase from last week to this week. Okay, why I say increase is because last week is negative 40k.
Less negative,
yeah, less negative. So it's actually an increase, right? But it's still negative overall, right? And you want to look at the week to week change in long and short. Right, so what you see over here is that the week to week short is more negative. Negative means people are exiting from it. Right, so both long and short, people are exiting from it. But short wise, a lot of people are exiting more than the long. Right, so this exiting of position can be because due to uncertainty in the currency already. Right, so the best part in COT when you want to use it to define it is when there's a very clear, for example, let me show you CAD. Alright, so for example, Canadian, you can see from last week to this week, the change in long position added more, right? But the short position exited. You see that?
Yeah.
That means from last week to this week, there are people exiting their short position because there's a negative. Alright, and long position is a positive one, meaning more people added into the long position. Okay, so what it shows is that the bullish sentiment on CAD is likely gonna be continuing for this week itself. Okay, but the only concern over here is your COT index is already all-time high. This is based on 3 years, right? So it's based on 3 years, it's already all-time high. So this is just some slight concern that you need to take note also. Okay, so this also helped to contribute to the weekly bias of why this is slightly bullish, even though last week there is no data from Canadian. Okay, yeah? So if you look at this, right, you can see how I come up with a technical setup. Okay, so this week is slightly less. Seldom we get this kind of setup, but because of market, we can't really control whether we have more sell or less. But just now, this evening, I think I added some because there are potential new setups. Right, so for example, straight away just look at the weekend signals, right? You can see there's odd Canadian sell, Euro CAD sell, and pound CAD sell. So if you compare this, so if you compare this, right, you're actually all buying Canadian, right? You're selling Australia, selling Euro, and selling pound. So this is something that straight away you need to be alert. Because if you enter 2%, 2%, 2%, you are actually trading 6% on pound, on CAD. Right? So if CAD now is slightly bullish, if CAD news come out and it shift the sentiment, for example, CAD there's this few data coming in, if it shift the sentiment and you enter all 3 of this based on buying CAD, you get exposed a lot. So this is something that you want to take note of, right? But of course, when we are trading these 3 currency, we are not only trading CAD, we are also trading another currency. So it can be 2 drivers. For example, Australian CAD, right? Selling Australian CAD. Even CAD might turn positive if Australian negativity and weakness overpower it. It's still okay, it's still safe, right? So, but if you look at Euro CAD, Euro just now we look at it is neutral. So the key driver here is still CAD now, right? Until Euro come in with their GDP, if I'm not wrong, let's check. Right, final CPI. So when this final CPI comes out, then Euro will be the driver of this currency pair. But as of now, because Euro is neutral, CAD will be the driving factor. Okay, similar for pound CAD. So we are riding on pound as well as CAD as of now because the one is weak, one is slightly bullish. Okay, so that's how we can play with this kind of understanding, and it also touch a little bit into risk exposure. Okay, and of course the opposite one is New Zealand CAD, and we are buying it, right? Because New Zealand is neutral as of now. Canadian, what we are doing now is we are actually going slightly against that trend. Okay, but if you look at the technical chart, it's still very far away. So what I'm riding on now is potentially New Zealand can change to positive aspects, from neutral to positive because of the comments from Wheeler. Right? Because central banks' decisions are always overpowering some other economic indicators. Okay, so for example, if things are going very well, but central banks say that no, they are not, and we are going to cut rate, their decision can overpower all the economic data sets. Okay, so let me show you some of the charts. For example, Australian CAD, right? Let's go over to Australia CAD. Okay. Oh, this. Okay, Australia CAD on the side. Okay, so normally when I check on my chart, right, I only check I would say once a day to see if there's any new potential setup. But of course, when the news are near and such, I will also be taking note of it, right? So in terms of like time, it's not really a huge issue, That's what I would like to say. Right. So for example, Australian cat. Okay, if I clear my chart. Right. So what you see, what you establish here, right, based on H4 time frame, it's pretty clear. It's from the top left moving to the bottom right. So it's very clear. It's moving in one direction. Right. Basically means it's trending. Okay. Usually when the market is trending like this, you won't be able to find any harmonic patterns or those advanced price patterns, because those patterns usually occur when market is bouncing up and down.
Ranging.
Yeah, ranging. So when you see such strong and clear trend, right, usually the strategy to approach it is 1, 2, 3, 4, or we call the structure trading. Okay, and we want to use fractals to help us. Okay, so if you establish, there are a few ways you can establish structure, right? Basically, if you take from all the way top, there's actually 1 to 2, and then from top to bottom, right? And what you are waiting for is for it to retrace back to the previous structure.
Why don't you take this? It's higher.
Why is because there's this form here already. So what I'm going to do is more of like this. Okay, so if you look at how I identify point, right, I always use fractal to help my visual guide.
So this is an old 1, 2, 3, 4. You're saying that?
Yeah, and of course it never come all the way back. Like it didn't come all the way back. So but it's a valid
to the 61.8.
Yeah, it's to this structure level.
Oh, okay.
Yeah, it's to this level, but it's a valid level. It's a valid 1, 2, 3, 4. Just that this time round it didn't come back up for a potential entry. Okay.
Can you draw the frequency? See, is it around 61.8?
No, this will be 786.
Why?
Oh yeah, 618. Sorry. Around there, but it never comes up. So this trade wouldn't have triggered, or you wouldn't have taken any of this trade.
No, why do you say it's 78.6?
No, sorry, 618. Alright, so it aligns. The important thing is not about the Fib number, but is whether the Fibonacci level aligns with your previous structure level. Yeah, that's more important. So you want two things happening there. Okay, so the reason why I use the fractal to help me pinpoint points like this is because the concept of fractal is that it's a turning point. So when there's a fractal happening, it marks a significant turning point.
The daily fractal.
Yeah, daily fractal, it marks a significant turning point. So what we have now is 1, 2, 3, and 4. So
this is H1 or H4?
This is H4 over
H4,
here.
Huh?
Yeah.
But H1 also you look for daily fractal.
H1, okay, I'm going to show you how it looks like, right? So this one, I established that this is the structure level, right? So if I go down to H1, you can also see that this is the level it is, right? So of course H1, if I clear some of my lines, right? If I want to trade it on okay, let me clear this Fib as well. If I look at H1, okay, I can also establish that it's moving from top left to bottom right.
Why not from here?
Also have, I mean generally it's moving from top left to bottom right. Right? So what you have is like this, right? If it starts here, it comes up to this level, and then after that it goes down. Okay, once again, how I establish this point is I'm using the fractal to guide me. Okay, because this is a H4 fractal, you would naturally see more of them rather than the daily one. Okay, if I
but isn't this also daily? No.
No, that's a 4-hour fractal.
Oh, okay.
Okay, why I know this is a 4-hour? Because there's 4 dot on the H1, right? But of course, if you color code it, it's even easier.
So there's no daily fractal here.
Yeah, the grey one. You see
okay,
24.
the longer one.
Yeah, because it's color coded. It's the same. If I go H4 again, you can see these are all color coded. The blue and pink are H4.
Why do you need blue and pink?
Oh no, it's just my color.
Huh? No, I know. But why do you have two different colors?
One mark the upper one mark the bottom one. Doesn't matter. As in, it's just a color thing. Up to you. What you like to look on the chart. So for me, I just use that. So there's just a color difference, a color preference. Right. So you can establish here as 1, 2, 3, and 4. Right. And this is a turning point, and it starts to come up out. So what we want to establish is there something happening around the previous structure in terms of Fibonacci? So what we do is we take our Fibonacci tool, we pull from 3 to 4. Right? And then what we see over here is there's this level of 50 coming exactly at this level.
So not necessarily 61.8, eh?
Not necessary, okay, but in this case, right, you see this whole rectangle is an overlap of 50 and 618, correct? It's actually an overlap, right? Because this whole box itself coincide with this.
Shouldn't the structure be from here? Eh?
Yes, okay, so this is what I want to share with you. If there's 50 and there's 618, I don't usually choose two level, I only pick one. So to me, risk to reward is very important. Right? So for me, I would be entering at 618 in this case when there's two options for me to choose. Okay, why 618 is because if I enter at 618, my stops will be at 786, slightly above it. My reward will go all the way to bottom. So you can see the risk to reward. But if I did this right, if I choose to enter at 50, my stop loss above there as well, then my TP will be below. You can see my risk to reward is less because I missed this whole chunk of reward. Okay, so for me, I'm not so aggressive in entering, but I want to favor risk to reward more. Got it?
The 50%, no, the 61% coincide with here, isn't it? Roughly,
Yeah. Correct.
But I see you are having 3 points here. So,
yeah.
So will you be taking this or will you be taking this?
Okay, the key here is this 1, 2, 3, they're all actually aligned.
A bit different level.
Yeah. Okay, because support and resistance is never one level.
Yeah.
So
Okay.
to me, I always look, even when I draw one horizontal line, I'm actually looking at an area.
Yeah. Okay.
So to me, this tree is actually aligned. They are the same.
Okay.
Okay, can get it right. Okay,
Yeah.
so this setup, if you zoom out back to H4, right, this is how it's going to look like. You're actually looking at this area only. Okay, so technically, right, just now I draw 1, 2, 3, 4, right? But when I'm trading this setup, I'm actually trading 1, 2, 3, 4. So I'm trading the internal structure of this entire move. Okay, so in this case, because it happens here, which is a very small part of your H4, I will actually consider this trade as a H1 trade.
I don't get you. Say again.
Because if you look at this, right, this entire setup happens at a very small structure of a H4 chart.
Yeah.
So what I'm going to consider is I'm consider this trade as a H1 time frame trade.
Okay. So are you choosing H1 time frame to trade or are you choosing H4 time frame to trade?
Okay, I'm trading two time frame.
Two time frame.
H4 and H1. Because H1, my stop loss is 15 pips buffer, right? My H4, I'm using 25. So these trade, I will only give 15 pips buffer instead of 25 because it's H1.
Okay.
Okay, right? Okay, so generally, if my H1 chart can show me the entire setup, I will take it as a H1. Right? But at times, a H1 chart cannot show you the entire setup, then I won't take it as a H1 setup.
But H1, your profit target won't be so much as compared with H4.
Oh, correct. But we are always playing with risk to reward.
Risk to reward.
Yeah. So the more important part is the risk to reward.
Or not so much the profit target.
Correct. Because profit target, if you are counting by exact pips, then it doesn't really matter because you are playing with risk to reward.
Okay.
Yeah. Okay. Let's look at the other one, which is EuroCAD and such. Okay. That's the other setup. Okay, so AutoCAD is structure, which is 1, 2, 3, 4. If you look at EuroCAD, okay, let me just clear everything. So my thought process goes like this, right? I'm looking at Euro as neutral, CAD as slightly bullish. Okay, and if I look at technical setup, I wouldn't want to buy as of now unless there's a change in either Euro or there's a change in CAD.
Okay.
Right. So with the bias of looking for short opportunity, right? What I want to do is I only look, for certain setup. Is there an M or W shape? Basically, if you look at this chart, highly there isn't anything. It's not clear. At most you get a one-sided. Haven't complete anything yet. Okay, then you want to look for the second approach, which is 1, 2, 3, 4, which you won't really find anything over here yet. Right?
Divergence.
Over here you don't find anything. Then you have the third strategy to engage the market. So you see for RSI, right? Over this area, it exited the 80 extreme level. Okay, and of course, what you see is that this moved lower, okay, but this one stays about the same. Okay, so this is what we call a divergence plus a double top. Okay, so this one, if you look into 2618, is your first and second criteria. Okay, the third condition is that it needs to break this level. Correct, your neckline, which is this level, this one. Okay, and you see price has broken below it.
But there's no fractal there.
Have.
Is that okay?
Usually we have a fractal because
So it's the lowest one. You choose the lowest one.
Yeah, it's the lowest point between your two tops or
the
two
lowest
bottom.
one.
Yeah. Okay, so you can see price breaks below it, and then now it starts to come back up. So what you want to do is you put in your Fibonacci, right, and you're waiting for it to come up to your 61.8. So you're expecting something like this. If it comes up to 618, you're going to short and expect this pair to continue going lower. Okay, of course not that low. My first target is back at your previous low, and TP2 I will use extension. So extension, I always pull the opposite direction from here all the way back up. Okay, and I'm using 127, which is here. Okay. How I set stop loss again is entry here, stops is slightly above 76, then you can see my reward. First TP is here, second TP is below. So you can see the risk to reward is close to 1:2 point something. Okay, right? Okay, so let me walk you through what's gonna happen for this week. Okay, so the first thing you want to know is Monday. That's very quiet. Basically, when Monday is quiet, it's very common. That means when market starts, usually news don't come in Monday, right? Then you look at Tuesday. In the morning you have Australian monetary policy meeting.
It's on Monday,
Tuesday already.
Oh, okay.
Yeah. Then after that you follow by New Zealand inflation expectation. Okay, so this will definitely move market because it talks about what are the expectation of inflation in New Zealand. Okay, so this is important. Then after that, following the day, you have CPI, which is Consumer Price Index, is also very important. Okay, so with that, if you look at Tuesday, there's not much Euro news. Okay, but you only have one high impact Canadian news, which is talking about manufacturing sales. So how you relate back to your trade, right, is that that 8:30 there's a Canadian high impact news. Right, we can't project whether it's going to be positive or negative because that will be guesswork. But what you can do as a trader, you want to take note of the trades that you have that involve Canadian. Right. So for example, EuroCAD, right? If before the news happened, we already trigger this trade, right? And so happen if let's say this trade is moving in profit, okay, what we want to do then is to shift our stop loss to break even to protect this trade. That means the worst case is that Canadian come out, the news doesn't favor our trade, we get stop out at break even. Okay. The other thing you want to take note is if let's say price continue moving like this until tomorrow, that means your trade hasn't triggered yet, and then there's a high impact news coming up. You might want to be closely monitoring it, or you might even want to consider cancelling this pending order first. Okay, so that's how we can do it. And if you look at this, let me clear the chart. Because there is a high impact news, we can trade the fourth strategy that we have, which is a breakout trade. Okay, so because there is one high here and one low here, right? Basically now it's ranging. Okay, and we know that Euro is neutral as of now, right? So we are actually able to trade either the break above it or the break below it, right? And this is going to happen tomorrow with Canadian. So wait until closer to tomorrow, then you can trade the breakout strategy. Okay, right? Okay, so how you trade the breakout is if you want to trade the top, break the bottom first. Alright, let's say if Canadian come in very strong, you want to trade the breakout to the bottom. The first thing to do is you use your Fibonacci tool. Okay, you pull from the low to the top. Okay, and you see two levels you need to look out for. Is your first is your previous low, which is your 100%. Okay, you want to put your entry at least 5 to 10 pips below. So in this case, this is 1.4564. Okay, so what I'm going to do is because it's closer to 64, I round down, it becomes 1.4560, right? I'll minus another 5 pip. So my entry is going to be at 1.4555. Got it? My entry will be 1.4555. Okay, my stops will be at the 88 and above. So at 88.6, I'm going to add a buffer. Okay, right? Okay, where I'm going to take profit, I need to use my expansion tool. Okay, so I only use expansion tool in my breakout strategy, which is going to be from, I need to identify 3 points, right? So it is these 3 points. Okay, and then my first level of TP is going to be 1:1 ratio, which is equivalent to AB equals CD, and this is the level. My second TP will be at 127. Okay, so if I draw in the risk to reward, right? My risk is slightly above there, slightly below this level, and my reward is going to be like this.
The price can go up this way also, right?
Yes, so if Canadian come in negative, then it's going to shoot up.
Yeah.
Right, so depending on what is the news going to come up, but we do not know because we cannot predict it. So we just put our setups in place and see which one is going to ride it. Alright?
Yeah. So if it goes up, you hit the stop loss, and that's all.
No, you haven't entered, ma. So what's going to happen is next tomorrow, if the Canadian news is strong, it's going to go something like this. We anticipate it's going to go like this. So it's going to trigger entry, and likely, if it's strong, it's going to continue going downwards.
Okay. But are there cases whereby it goes up? It goes up.
Have.
Yeah.
Yeah. So it can do something like this. It goes down, and then it comes all the way back up.
Yeah.
Can. That's why you need your stop loss because it's not going to be 100% thing.
But are there cases where you put another entry on the other side?
Over here.
Yeah.
Have. So for example, in this case, right, I'm going to do actually two sides. Meaning
will you do it?
Because euro is neutral, I will likely do both sides. That means I also trade the breakout above it.
Okay.
Okay, right? Okay, any questions regarding this?
No. Actually, I want to go back to the COT report. If you don't mind going back to the COT report.
Okay.
Before going to the Canadian one, what was the pair that you were showing just now? There were two negatives. Was it two negatives? The COT report.
Pound. This one? This and this negative?
Yeah. Yes. So we were saying that this one is less negative. So there's an increase in the
net position
of pound futures.
Yes.
Okay. So here there is a big decrease.
Correct. In short
position.
From last week to this week.
From last week to this week. So that will add on to here.
This will affect this. Correct.
It will affect this.
Yes.
Okay. This one more negative.
This one more negative.
This one also more negative.
Yeah. Okay.
I mean negative lah.
Yes.
Negative. So this one is exiting long position. This one exiting short position.
Correct.
Okay. If it exit long position, how are you going to compare this? What I want to know is how these two affect this. Okay. What's the relationship?
So let's focus on one column first, right? Net. If it changed from more negative to less negative, we usually use the term increase.
Increase, yeah.
Right?
Increase.
It increased, but it's still overall negative. Okay? And if you compare long, this two is the same concept. Okay, if you compare long wick to wick, it's just showing you if it's a positive sign, meaning more people add on to their position.
Yes.
If it's a negative sign, means people exit their position.
Position. Yes.
Okay, so in trading in the futures market, you have two positions. You either long it or you short it. So if the long column shows a negative sign, meaning people are exiting it.
Yes.
Okay, let's focus only the long side and the relationship between net and long. So if people exit long position, your overall net is actually going to decrease.
Yes.
Okay,
Yes.
because long helps to contribute a positive net. But if people exit their long, your net position overall is going to decrease.
Yes.
But if you look at this now, short, okay, short, similar concept. If it's positive, people are adding to their short position. If it's negative, people is going to exit from their short position.
Mm-hmm.
Okay, and if you look at this is negative, meaning people are exiting their short position.
Yes.
And when people exit their short position, it helps to add on positive net position.
I thought it's add on negative position.
No. Okay, see short, if people exit short, overall net, it becomes more positive. You get it?
I don't.
Okay, for example,
Yeah.
short, right, that means there are maybe a lot of people shorting.
Yeah.
Right? When people starts to exit their short,
Yeah.
meaning they get out from a short position,
Yes.
the overall net effect is going to be more positive.
Okay.
Because initially a lot of short inside, now the shorts are getting out, your overall net here will increase. Because net here is actually a summation, meaning the take into account your total long and your total short.
Yeah. Okay.
If long more than short is positive, if short more than long is negative.
Yeah.
So when people exit their short, it actually contributes to positive net.
Okay.
Okay, that's why you see here, even though when long positions are exiting, right? This one it gets more positive or increase the net position increase because more people are getting out from the short position. So if you don't look at long and short, right, but you just look at net, it's not very conclusive because over here you are just seeing that it's getting more and more positive. That means it's an increase in net position. But if you compare and look into this two column, you can see that overall people are exiting positions. That means there are no people adding into their position. So it gives you the idea that the sentiment on pound futures is uncertain.
Okay. Even though there is a positive net here.
Yeah.
Even though there's a positive net here.
Positive means it's increasing. It's still negative. It's just that the magnitude of negativity is getting lesser.
Lesser, yeah.
Yeah. So it's increased, but it's still negative. That means overall positions in pound is still negative.
Okay. But can I just conclude by looking at both negative and say it's
No.
no.
Okay, because let me see if I can give you example. Okay, there isn't. Okay, imagine this. This is negative. This is positive, right?
But now negative, huh?
Now negative. Imagine this is negative. This is positive.
Yeah.
Right. So what you want to first establish is overall is the net positive or negative? Because even if let's say now this negative, right, the overall is still negative, meaning the overall sentiment of pound is still down. It's still negative.
Okay.
So you cannot just look at this too. You need to look at also the net because the net tell you the overall picture.
Okay.
Got it?
Yeah.
Got any questions regarding this? All clear? Okay. Then let's look at New Zealand CAD. Then I can show you the different setups that we have. Okay.
This chart, you normally don't draw all the charts in your one. I thought I saw only one on your weekend one. Only one.
One.
Yeah. you have got the 5 or 6 signals, eh?
Yeah.
You drew all the 5 or 6 charts.
Correct.
All of them?
Yeah.
I thought I saw only one.
I think this week I haven't uploaded. No. I think this week I haven't uploaded. Yeah, later I'm going to upload it. But basically I save all of them.
The rest are old ones. I mean, you have one chart here, then the other two they are old ones.
Wait, you're referring to the website, is it?
Yeah.
Let me bring you there, then it becomes clearer.
I just went in this afternoon to take a look at what you have inside.
Okay, you go under this, right?
Yeah.
Okay, you click it from the email, right? I think this week, because I haven't uploaded the charts yet.
So it's either here or here also can, eh?
Normally, if it's the... What's the password? Yeah, I typed wrong.
Yeah.
Okay.
Yeah. These two are old ones, eh?
16, yes. Let me check the date.
Oh,
Yeah.
This only one.
This one. No, you need to click into it.
Huh?
You click. Oh, so I uploaded. Totally forgot. You need to click into it.
Oh, okay. I thought I saw only one.
No, you need to click into it. Okay.
Oh, okay.
So just now you see like this, right?
Hmm.
You need to click into this.
Okay.
Yeah. Then you can see all the charts over here.
Okay.
Can?
Yeah, okay.
Yeah, so all the charts are here lah. Like this one, we went through OddCat, EuroCat.
But you would expect us to do it ourselves rather than look at it, eh?
Yeah, the best part, the better part of how you can get practice is you do it yourself first.
Yeah.
Then you go and check
against
to
it,
double
yeah.
confirm lah.
Yeah.
Okay. Okay. So, for example, right, we also have New Zealand CAT. So just now we look at the fundamental bias, right? New Zealand is neutral. Okay. Canadian is slightly bullish, right? So just now I say that New Zealand CAT is slightly counter trend, right? Reason is because I also take into account what is happening in technical at the same time lah. But you need to be very aware when you set up this technical trade. Are you going against the fundamental? Right? You need to have a very strong reason as to what is happening also. Okay, so let's look at just purely technical. Then I explain to you my thought process later on as well. Okay, so if you look at this chart, right, what you are seeing is that there's actually currently a price at this level. There is no clear direction as to where it's going to go because it's still hovering from middle, going in the middle direction. So basically, what it's doing now is in a range environment. Okay, when it's a range environment, you want to adopt the strategy which deals with patterns. Okay, and with patterns, the first idea you want to start adopting is search for M and W patterns. Okay, so overall, you have a few patterns actually happening. You have not patterns but shape wise. All right, we have this first. Okay, which is a W forming. Okay, so once you identify something like this, you always need to use Fibonacci to go and measure whether it's happening or whether the ratios are met, the criteria are met. So the first thing to do is find the retracement. You can see this comes in at 618. So 618 is a potential Gartley pattern. But you need to also check whether your second conditions are met, because the second condition, it needs to meet at least also a 61.8. So if you pull, right, you can see that it doesn't really fulfill it. Okay. So how I trade the Gartley pattern is very strict because the first criteria must be 61.8, meaning your X to A to B must be 61.8. My B to C must be also 61.8.
But generally it's from 0.382 to...
Okay, some traders trade it more relaxed. That means the rules are not very strict. But for me, I trade it very strictly. It must be at 61.8. Okay, so in this case, it doesn't meet. So I won't trade this.
Is it because of risk-reward ratio?
No, nothing to do with risk to reward. But I just want the criteria to be stricter lah.
Yeah, but why stricter? I mean,
okay.
Does it mean that you come down, you make more money?
The concept here is because of 1:1. For example, if... Let me delete this.
So it's still risk to reward, I presume?
Related. So if you see this one is over here, right? This doesn't come to 61.8. So if I put in a 1:1, right, you can see where it ends. It ends very high, close to your initial point. But if this point, it comes to 61.8, right? It's gonna be
A bit lower.
slightly lower.
Mhm.
Then what I want to do, cause this one I teach you guys is I use extension of 127. Correct?
Mhm.
Then this is where 127 comes in. So it's very close. But if it's too high at 382, you can see this 1-to-1 actually extend more than my X. So it's not just risk to reward, but it's basically I want it to be very strict.
Mhm.
Yeah, such that this 127 at most it falls is very close to where my starting point is, but shouldn't always exceed it.
Okay.
Okay, so in this case, then this Gartley wouldn't be one pattern that I'm going to trade.
Your this 61.8, does it apply to other patterns?
No, just Gartley.
Only Gartley.
Yeah. Okay. Then what I identified also on this chart, we have another potential N coming in. Okay, this is a bit premature because it's still on the top, haven't come down yet. But if it starts coming down, then you can see the M happening. Then once again, you put in your Fibonacci tool. Alright, so I'm candidate.
But don't you see the curve coming down? I mean,
I don't. When I trade pattern, I don't look at RSI.
you don't.
Just pure this. RSI is only for divergence.
Yeah. Okay. But if it is in the overbought position, chances are it will come down.
That one I don't know. I never do any live tests or statistics, so
Okay.
I cannot tell you that.
Okay.
Yeah, but I don't use this when I'm trading other strategies. Only 261 I
divergence,
use this. Yeah. Okay. So if this M, you look at this, it comes at 50. Right. So 50 tells you there's a potential bad pattern, and it completes around the 88.6.
Okay.
Which is this level. Okay.
So this one doesn't matter whether it is 61.8 or
yeah.
just
this
the
one is
range.
just the range of 382 to 618.
Yeah.
So no, 382 to 886. So in this region.
Okay.
So it fulfills that.
So only Gartley only.
Yep. Okay. So what you see now is I'm waiting for it over here, right? And this is slightly against fundamental. Because New Zealand is neutral, Canadian I'm actually slightly bullish. Okay, so bullish Canadian, I'm actually expecting it to go all the way down. Okay, but I'm still putting this as a pending first, and I'm going to monitor what is going to happen for tomorrow Canadian news. The reason why is because the room for here to here is very wide. It's about 150 pips. Alright, and this 150 pips, because I'm only slightly bullish on Canadian. Okay, let me go back to that. I'm only slightly bullish on Canadian. So because of the 100 pips, which is very far away from my entry point, the Canadian sentiment can shift when eventually it reaches here. So what I'm doing now is I'm just putting my order there, and when it needs to, I'll just cancel that. Right, so that is the thought process that I have behind taking this trade. Okay. So with that, right, usually what I'm going to do in my, other than weekend, I'm going to do order signal and then I send it out to you, right? Usually during a normal day, okay, that means let's say today ended, tomorrow, every day I at least spend once looking at the chart because I need to keep updated as to what are the technicals are doing also. On top of just a fundamental. So how I'm going to do, right, is usually I scroll through the currency pairs. So for example, like there's not, let's say these are MT, right, default template. So what I'm going to do is I'm going to scroll through one by one each of the pair. So for example, this one, Euro Dollar, during the weekend, because this entire move here happened today, meaning last Sunday, it's only up to this candle. It means this highlighted grey box haven't happened yet. Okay, so what it means, right, is that when I'm analyzing this chart on Sunday, this is not there. There won't be any potential setup. Correct? So if let's say today Monday I open up the chart because there's some new development of what's happening in the price, okay, then I can see, oh, there's actually a 1, 2, 3, 4. Right, and it aligns currently with the overall fundamental sentiment because
I got a question to ask you.
Yeah.
When it turns up, would you look for 2 on the right, 2 on the left?
I don't have to look for it because I have the fractal to help me identify it.
A fractal will only occur when there are 2 on the right and 2 on the left.
Correct. So if there's no fractal, that means this is not a turning point yet. I won't bother.
But
looking for
it can also later come down, lower than this also. It is possible.
Yes, so now it can actually come down like this, and then
Yeah.
it
So,
can-
but then you already drew your what do you call it?
no,
Your
then
1,
you
2, 3,
won't
4.
you won't trigger what you just
Yeah, won't trigger lah.
yeah you just wait off.
Yeah,
get
okay. Mm.
Yeah. So if this happen, then now you have a valid 1 to 2, then go up and then come down 1, 2, 3, 4.
Yeah.
Right, because this is a established turning point and it's now going up. So if you look at this, right, if I once again the top process, if I can go down to H1 and can I see this clearly, I usually take it as a H1 trade. So I just pull my Fibonacci from this to this point. Right, I want to find
What you say you usually take H1 trade when you started from H4.
correct. Okay, why, right? Because H1 I'm only giving a buffer of 15, H4 I'm giving 25. So tendency for risk to reward is because you give a buffer of 15, you have that 10 pips more. Yeah, that's it. Right. So if you do this, right, you go down to H1, what you see is this confluence over here comes in around the 50%.
But,
right?
but most of your signals are H4. Eh?
Yeah.
It's not even H1.
Yeah, seldom H1, mostly H4.
Yeah, okay.
Yeah. But the concepts apply exactly the same. Right? So if you look at this, then this is 50% is where I'm going to enter. 786 is my risk. 0 over here, the previous low is where I'm going to put my TP1. Okay, so you can see this is my top process as I scroll through chart. Then I'll just continue scrolling. So if Japanese, do I see anything? Sorry, not Japanese. Pound dollar, do I see anything? Right? There might be something here, 1, 2, 3, 4. But if I zoom in and I start to pull my Fibonacci tool, right? What you see over here is that there's no confluence. So usually when this happens, I don't trade it.
This is H4.
This is H1,
H1.
already, yeah. So H4, this is how it's going. So when there's no confluence, I won't trade it.
You're doing this way, 1,
Yeah.
2, 3, 4.
Correct. Because there's no confluence from structure and Fibonacci.
But your 3 and 4, your 2 and 4 is very close. It doesn't matter.
No, that's why I don't trade it.
Uh-huh.
Yeah, it matters because if it's very close, your Fibonacci won't align with
Yeah,
it.
yeah. Okay.
So that's why I won't trade it.
Mhm.
Okay.
Okay.
So this
Because
is an example
it looks bad to me also. Yeah.
Yeah, so this is something that I won't trade. So I'll just put it and then I'll continue monitor it. Then if you continue scrolling, okay. So the top process here, this is happening. You can see the divergence, right?
Yeah.
But they haven't fulfilled all conditions because it needs to break this level.
Mhm.
And it hasn't break yet. So what I'm going to do is I'm just going to continue monitor.
So your neckline is always horizontal. You don't do those.
Oh, I don't do those. Yeah,
You don't
it's
do-
always horizontal.
Always horizontal. Yeah.
Okay, so this is something that you can continue monitor. You never know, maybe tomorrow they decide to break it. You
Mhm.
get what I mean? So this is my top process every day when I look at chart. Okay, so then the next one is you continue scrolling. Okay, is there anything? Right, there is, it seems to be something here. Right, and if you pull in your Fibonacci, you can see that it's at 382. So this one during the workshop I also shared with you, I don't usually take a 38.2 retracement trade because of risk to reward. Okay, but doesn't mean that it wouldn't work out because fundamentally Aussie is going to be weak, USD is going to be slightly bullish, so there's still chances that it's going to go
Come
down.
down.
Yeah, and now it's currently rejecting this level lah. But because my plan says that I'm not going to take trade 2, I'm not going to take this trade. Okay, so what I'm going to do is I'm just going to continue monitor whether there's something going to happen. Right, then of course you look at next chart and next chart. So if you look at this, right, you look at from what is happening here is basically it's still moving horizontally. So straight away you think if price is ranging, you want to adopt the strategy of pattern.
Mhm.
Right? So as a pattern trader, what you want to do is to identify M and W shape. So if you look at this, there's a potential W.
Mm.
Correct?
Mm.
Right. So what you need to do after you see a W or M, you need to always align back whether they meet with the Fibonacci level. So if you pull this, you see that it comes at 382. Okay. For me, that time I shared with you guys also during workshop, bad pattern, for me, I need to take it at 50%. Okay. But if you look at the illustration, right, 382 is considered valid. So it's really up to your plan. So if you look at Vincent's plan, he actually take 381. So that's why I say you guys also need to go and formulate that trading plan. Because then you know, okay, this do I trade or do I not trade? So Vincent trade, I don't trade. You get what I mean? Different people has different approach to trading.
No,
Yeah. Okay, so just now we were talking about the plan. That's why it's important to have the
Mm.
plan. Because, for example, if this happen, if you don't pen down what is your plan, you will be then now you start to decide whether you want to trade or not. And it's gonna be a very bad decision because you are making a decision when money is on the table. Right? So what you want to do is you always plan out what you're gonna do before you go and trade. Because when you trade, your emotions are going to be affected and such. That's why it's not going to be a rational decision process.
Okay.
Right? So that's why the trading plan is important. Okay, so if let's say Vincent see this and he decides to trade, then he's going to enter that pattern is 88.6. Okay, so then you also want to account whether fundamental is aligned. Alright, so from here to here is actually a huge move. Okay, it's about 210 pips.
Yeah, that's the reason I trade the CD leg.
Yeah, so you need to go and start journaling so that you have a statistic to show whether overall it makes money or not. Because right now I can't answer you that as well because I do not know. Right? So if you decide to take this, then when price moves closer, that means if price comes closer to this level, around this, then you need to assess whether the fundamental is aligned with this because it's still huge, right? There's about 200 plus pips up. There's still a lot of room for it to move, and when it's moving up and down around this region, fundamental might have shift because you have news coming in. For example, New Zealand, you have news coming in on Wednesday as well, right? And then on Thursday, you have also USD news. So from now to then, with this huge amount of difference, there might be development and changes that's happening in the market already. So that's the part where you need to be in tune with what's happening at least once a day. Okay, then I will continue scrolling lah. So like for example, this is something happening, right? So it's not a very strong break over here. It haven't break and close above it. That's why I haven't traded this. What I want is it wants to break and then it close below it. Then I will trade it. So I'm still monitoring what's going to happen here. Okay, then continue looking like this one. Okay. I didn't send out on the week end signal, but it's valid, alright, because let me clear everything. Because what you see is this part never happened before today. So it only happened today. So today it confirmed that it broke the neckline, which is here. Okay, and you see that there's a divergence happening. So what I'm doing now is I'm just waiting for it to come up, retrace to 61.8. Okay, retrace to 61.8, which is here, and then that's I'm going to trade it.
To short it, huh?
Yeah, short it. Okay, so this short is not very strong because Euro is neutral, Japanese is also neutral. So this is just pure technical trading, technical setups. Okay, then of course you continue finding check for charts lah, right? Cause I look at charts a lot of time already, so I can easily scan through. I just spend about 3 to 5 seconds. I can see whether there's something on. Alright, that's why I can look at so many pairs. Similar, this one, okay, Japanese, pound yen and euro yen. So once again, right, look at these two, similar kind of setup because the yen pairs all move the same. So again, on the topic of risk management, right, risk exposure, when you have two things like this, for example, euro yen and pound yen. Right. If you take two of these trades, you're actually exposing yourself to 2 times of Japanese yen. Okay, so there are two approach that we share with you also during the workshop. One, you downsize your risk per trade, meaning both you want to take, but you take instead of 2% each, you take 1%. Total is still 2% risk. The second thing is out of these two, you pick the best. Okay, so if you look at fundamental, right, euro is neutral, pound is bearish, so higher chance of this being a profitable one is definitely your pound. Yeah, so you have few things that you can approach it, but all this needs to go to your plan first, because if you don't go to your plan, now you look at it, you start to feel, wow, if I only take one, maybe I'll miss small profit. You get what I mean? Then you start to get affected by your emotional process. Then initially, if you decided to just stick to one, but because you never have a proper plan, then you decided, oh, maybe I just take two lah, because have a chance of profiting more and such. Then that will kill you in the long term. Okay, right?
Probably that's the one that kills me.
Yeah, so you need to have all those plans lah.
Mm.
So if you continue scrolling like cat yen, there's nothing much really happening here, right? There might be some pattern happening, but it's still very infant stage, still not very mature yet, right? New Zealand similar thing, right? But it's still not still a lot of room for it to move. So I haven't really decided on drawing all this yet. Okay, because if I look into this is a potential bad pattern. Okay, never hit 50.
Yeah.
Right, so no also.
Yeah.
But this one, I assume it should have very close. I think.
Yeah.
Yeah, right. If it's very close, let's say, then your bet will be entering around here lah. So it's still a lot of room up. Alright, it's about 380 pips. So with this movement, normally I won't send out a signal first, because what you can do is easily just go like this lah. Yeah. Then I'll send out a lot of signal and then I'll cancel a lot of signal. So I'll wait for it to be more stable. It means the higher chance of it being established, then I'll only send out. Okay. Then similar for euro pound. Alright. So if you look at this kind, right, what it's doing here is actually ranging. Right. But I wouldn't want to enter a breakout strategy now because I want to find a catalyst. Okay. So catalyst, how I do it is I refer back to my calendar. And I'm trading euro pound, right? That pair is euro pound. So I want to find either a euro news or pound news. So you can see that tomorrow 4:30 is a CPI one. So I can potentially use this pound CPI news as my catalyst to drive euro pound. Okay. So if you look at this, I can actually trade the break up or I can trade the breakdown. Why? Because euro is neutral.
I thought it's a channel here or something.
Yeah, I don't take parallel kind of support resistance on channel. So I always look at horizontal levels only. Yeah.
Okay.
So I can take either the breakup or the breakdown because euro is neutral. It means I don't have a bias on neutral on euro currency. Okay, so if I'm looking at this, it's either going to be up, which is break there, or it's going to be breakdown. So depending on what's going to happen for tomorrow pound news. Okay, so that's why I also haven't sent out. Okay, right? So that's the idea, right? Then if you continue scrolling, okay, so this one is also a valid 1, 2, 3, 4. Okay, but I'm not very in favor of this trade.
Why?
Because of fundamental. Okay, so let's look at this, right? If I enter at this level, which is technically a 1, 2, 3, 4 confluence with your structure level, right? But if I buy Euro New Zealand, I'm actually shorting New Zealand, correct? I'm buying Euro and I'm shorting New Zealand.
Your structure level is this point or this point?
This point.
Why not this? Because it's nearer.
Why is I'm taking this is because I'm taking second 1, 2, 3, 4, right? I always take the 2.
Oh, okay.
Yeah, I take the 2. This is in between of your entire 3 to 4 movement. So I won't take that. I only take the 2.
Okay.
Okay, yeah. So back to the topic, right? Why I wouldn't favor this buy trade is because if I buy this, I'm actually shorting New Zealand. Okay, and if I go back to my fundamental bias here, though it's neutral, right? I'm looking at central bank's decision that there will not be another rate cut in the near term. Okay, so because of that, right, I'm not wanting to put my money at risk because of this. It's just as simple as that level. Okay, but doesn't mean that this trade is not going to be turned out profitable. It might be a super profitable trade, but as a trader, I always look at managing my risk first. Okay, so once again, depending on your plan, how aggressive you are, you can decide to take or not to take. Okay, then Euro odd again, you can see nothing really happened because what it's doing here is still in this zone, right? Then if you're looking at this, you want to have another catalyst to trade the breakup. Unless you have that, don't trade it. Okay. Then if you continue scrolling, very similar chart, pound Aussie, right? This is pound New Zealand. Okay, pound New Zealand. What I'm looking out for here is a potential bad pattern. Right, but this is why I never key in or never send out this signal is because it's everything against fundamental. Yeah. So I'm just monitoring,
Mm.
right? I'm just monitoring, but I'm not going to trade it. Okay. Who knows? Maybe when it decide to come lower, right? And then there's a shift in, because this is about 250 pip. So maybe when it decide to come down, I just keep monitoring. When it decide to come down, then there's a shift and change in pound fundamental or New Zealand, then I might want to take that trade. But as of now, because nothing, then I just leave my analysis as of now like this. Okay, then Aussie, just now we went through all cat. Pound chef. Also, if you look at what's happening, is now in the box. Okay. Okay, right? Okay, if you pair up with franc, right? Basically, franc is a fundamentally weak currency, and they only strengthen when it's risk-off environment. Get it right? Okay, Swiss franc is usually a weak currency until a risk-on environment. So usually, if nothing's happening, when you're trading against franc, you're almost like trading pure whatever currency the other one is. Just take it as that surface level lah. Yeah. Okay. So usually I don't really trade a lot of franc also, because it's not easy to trade a franc currency pair. Because I'm going to show you some, right? How it looks like is they're all gonna look very similar in terms of how they move. For example, let's look at Odd franc and New Zealand franc. They like to do something like this. It's very ugly in terms of the chart. Like you can't really trade 1, 2, 3, 4 here. There's not much of a pattern you can trade, right? And then if you look at Aussie franc again over here, you can't see clearly 1, 2, 3, 4 also. So basically, the strategy I use can't really engage a franc setup, right? But cat now is again in a box lah. So depending on what's going to happen.
Why do you draw the box? Why can't it be bigger, the box?
Bigger, is it? No lah. It's just I anyhow pull a box because it's without the box you should be able to see that price currently is just consolidating.
Yeah. Okay.
Okay. And this pair, what I'm looking for is for it to break up only, because cat I'm slightly bullish.
Yeah. Okay. The top of the box is here, but the bottom, where would you put here? Would you put here?
Not important, because I'm not going to use the box to make trading decision anyway.
I thought you put your entry price above it and below it.
No, I'm based on this ma. My entry price is based on this high, so it's nothing to do with the box.
Yeah, but your box is decided by these factors. I mean, exactly.
Correct.
Yeah.
So I can easily just draw a horizontal line there. So.
Yeah. Okay. So the bottom one, the bottom horizontal line.
There's no bottom, because this pair I'm really looking for up. Okay. Let me show you the other one.
Yeah, but
Just now we have one that is both sides, right?
Yeah.
I think it's Euro something. Which pair is it?
Cannot remember.
Yeah, I think it's pound something, right? Euro pound. Okay, Euro pound is both sides, right? Because euro is neutral, so I'm trading on pound as a catalyst, right? So what I'm looking out for, okay, if I don't draw a box, basically this is the upper high of where I'm going to trade a breakout. Okay, this is the bottom of where I'm going to trade. So okay, I'm drawing the box just for illustration. That's it. Yeah. Okay, some things I draw on the chart is just for visualization. Okay, because what we do for the strategy that I adopt, a lot of them are based on Fibonacci. Yeah, actually not a lot. It's all of them used with Fibonacci too. Okay, right?
Yeah.
Yeah. So let me go back to this.
Because the reason I asked is because there was once Florence was telling me about box. Say you all like to use box and all these, so I was wondering what box is it.
Okay, like a lot of things I draw on my chart is really just to help visual aid. Because when I post it on blogs, everything, visual aid helps. Yeah. Okay. So if you look at some of my normal blog posts, I draw a lot of all these boxes also lah. It's just
your desktop is as ugly as mine.
Oh yeah, a lot of stuff lah. Yeah.
Yeah.
So things like this lah. Right, this is S&P. So I like draw all these boxes is to identify key support and resistance area. That's it.
Yeah, you see, again, you put what do you call that?
What box?
The zone.
Zone.
Supply zone.
Basically, it just means resistance level, resistance area. This entire area is a
Yeah, but why do you say supply zone and not resistance zone or some other zone? Why
Okay, to
supply?
me, I use it interchangeably.
Mhm.
Supply, demand, support, resistance, structure, all to me is similar meaning.
Okay.
Yeah. Right. So I just show you some other like this. Demand meaning basically means this is where a lot of support is coming in. Then this is potential resistance area.
So you draw this support and demand zone.
Yeah.
Is on the candle top and the candle bottom.
I wouldn't say strictly for that. I don't have a strict rule as to how to draw
Yeah.
it, but it's purely based on let's say this is the highest
The
point,
highest
this is the
point, yeah.
lowest point.
Yeah.
What I want to take is because resistance and support is never one line. So I always take the area. Why this entire area? Because you have this and you have this.
Yeah.
So that's the area.
Are there factors?
There's no fractal. Apparently, there's no fractal on Trading View. This is a Trading View chart. So I can't include the fractal inside because they don't have that indicator.
I thought that indicator you load in on.
But Trading View don't have. Trading View is a web browser charting software, so they don't have. It's not an MT. This is not an MT4 chart.
Oh, it's not MT4.
Yeah, it's not
okay.
MT4 chart.
Okay.
So this one is dollar index. So during the workshop, we also share with you how you can monitor correlated markets, right? So dollar index is tied to almost every currency pair that deals with dollar. So you can see overall it's still going down, right? So what you want to see is if you are buying dollar, you want to see what is some of the potential resistance you're going to face when dollar index goes up. Okay. So right now you have some little movement, some little room here, and if dollar index is going to reject off this resistance level, then let's say your other pair like euro dollar is going to be affected and such. So
yeah.
Then some other currency, some other index like S&P helps you to track equities index. Equities market helps you to track the risk appetite. Okay, generally, if all the equities market are going up, your risk appetite is risk on environment. Okay, so what you see over here, this is a very strong supply zone or resistance level, and therefore price is rejecting of it. But right now at this bottom, you have also a support. So now it's depending on whether this support is going to hold or this supply is going to hold. So if this is going to continue higher, then our risk on environment is very clear. Okay, of course we also look at wicks. Okay, wicks is still below your market risk level, which is 20. Now it's trading around 15. So wicks itself is the most simplest way of identifying whether it's risk on or risk off. So below 20 is risk on, above is risk off, right? But what we want is we want to also find more confluence, like whether the equities market are doing well or not doing well. Okay, so if you look at like DAX, which is the German one, you can see that overall it still has room to go up, right? So when there's room to go up, meaning if it really goes up, then you have a very strong risk on environment. And risk on, you always look at Aussie or Kiwi or Canadian. You look at commodities currency, right? And then Aussie just cut rate, so you wouldn't want to long Aussie. But New Zealand, they say that highly likely they're going to cut rate again. So New Zealand will be a very strong pair. If risk on takes place, you want to look into New Zealand pair. Alright, so this is how we can use all this information to, even though I don't trade all this market, it's there to actually help me make more informed decision. So for example, gold market, right, is generally still going up. Right, gold is related to Aussie lah. Right, so when gold starts to drop because of this resistance area, and you also see there's a divergence, a huge one happening. If gold starts to drop, Aussie will also fall. And you're going to fall very significantly because of the fundamentals of Aussie as well. Okay, but as of now, gold is being supported now, going higher right now. Okay, and then if you look at oil market, okay, oil is also going strong. That's why Canadian is also going strong. Right, but when you reach this level, you will face some resistance, and that's where you also want to understand that, okay, when oil eventually reach this level over here, okay, it might face some resistance. You might not want to buy into Canadian when oil is trading around this level. But right now, you still have some move for it to go up. You still can get into Canadian trade. Yeah. So this is how you can trade inter-market relationship. Okay, right. It seems like a lot of things, but
Yeah.
as you as you progress, you get faster and faster.
Yeah. The more you teach, the more we forget.
No, you need practice. That's why when you practice, then you get sink in.
Yeah.
Yeah. As a start, you don't look at so many currency pairs. You just look at a few lah. You look at the major ones.
Yeah.
Then you won't get too much information that you need to access.
Yeah.
Yeah. Okay, so you guys really need to start the plan first. Like Vincent, right? You guys haven't saw Vincent's plan, is it?
You're saying that it's in the 4 pillars, isn't it?
Yeah.
Not in the my FX box or something, right?
It's in the 4 pillars. Let me show you where you can access that. Yeah, over here. Right, so he actually updated this 3rd edition. You go and read through Vincent's plan, right?
I look through Vincent's plan
You
first.
look through. Okay, so the idea is that a plan shouldn't be too complicated, such that if now you read his plan, you will know what are the thought process, what are the rules that you need to follow.
So you consider him okay lah, in other words.
This is okay.
Okay.
Yeah, right. But I dropped some comment because initially he missed some of the things lah. That's why I asked questions and then he go and add into it. You know what I mean? So if you look at the questions, okay, not this.
You mean your questions also inside?
Yes. He didn't answer some of the questions, so we actually asked him under history, right? You can see when he first uploaded yesterday. So I actually also tell him that he needs to think and pen down how he's gonna deal with situation where he has 2 setups that are correlated lah, because he missed out that plan initially. Okay, he looked at currencies that he's gonna trade, right? Okay, now he included the previous plan that he had. He never talk about how he's going to deal with, let's say, when you have 2 setups, let's say, for example, Aussie dollar and New Zealand dollar. When you have both this trade coming together, how are you going to deal with it? You need to write it down in your plan. Because if you don't have this plan with you, and then when you see it in the market, you're going to either get very fearful or going to get very greedy. So when that happens, you need to turn back to the plan. Alright, so things like this, he also said this throughout the week, focus on key news, mention currency news, right, and then decide whether to exit or enter breakout trades. Okay, so when you write something like this in your plan, right, it's not clear. Why I say it's not clear? Because you only write decide, but you never write the criteria and the conditions for you to decide. That's why I asked him what are some of the criteria you need to monitor for you to make a decision. Right, the whole idea of having a trade plan, right, is because you write it when you are not involved in the market. Your thought process, your decision making are all very rational. Right? But when you start trading, when your money is on the table, you tend to get very emotional. That's why the plan is the best rational decision that you can think of already.
I noticed that when I trade, I don't have time to do all this. Seriously.
This is done before you even trade.
Yeah, I know.
Yeah, the plan should be out even before you start trading.
Yeah.
When you trade, when you do journal, let me see if I think it's okay. You need to do journal, right? It's simply because you want to track at the end whether overall this plan of yours is going to make money or not, right? So I can show you how it looks like. Taking time to look.
Does it have a journal?
Vincent,
have.
Also
there.
No, I don't think he showed it. But he has it.
Journal is this one, something like that.
Yeah, then we can show you what we did. It's quite a big file. Okay, so you see, he tracks all the trade that we take. Okay, tracking the risk to reward and such. Then after that,
this one Vincent one.
No, this is ours.
Oh, yours.
Yeah, so you can see the previous weeks and everything. So it's a huge file. This is Lester. Lester is doing this for me.
Okay.
Yeah, he's doing all the journaling for me. Okay, so with all this data, right? If you look at our signals, right? Our signals are all consider journaling also. Why? Because you see, I can simply click onto last year September. Right? I can look at some of the trades that I've taken. Then I can check quickly my performance for that month. How was it and such. then with sufficient data set, I can actually crunch out numbers and see that which strategy perform better, which strategy doesn't perform. Yeah. So this one I think I showed you last time, you guys doing the workshop as well. Right. So with all this data, right, you can do something like okay, this is based on 8 months. So I can do something like, I can analyze, okay, my performance for it. Okay, May, June, July, August, all positive. And if you look at this, last 8 months, December came in negative. Right. So then, of course, then you can make based on this, right, you can simply start to identify that maybe December is a very bad month for trading. You don't know when to trade it. Yeah. Then if you continue looking, right, I also split into like euro dollar. Overall, if you only trade euro dollar, we actually can get about 17% return. If you trade USD, you get about 60% drawdown. Yeah. If you trade pound, you get about 20, Japanese yen 37. So because of journaling, I get all these statistics.
Mm-hmm.
I even have the win ratio, right? And of course, all other currency pairs. Okay, so with this data set, right? I can straight away think, okay, maybe I want to focus more on Japanese yen, pound, euro. I want to skip all my USD trades, right? And then Swiss franc only give me very minimum return. I might not want to trade franc pair. So all this data can give you all this information, right? And then I can also look at portfolios. That means if major portfolios are made up of this 10 currency pairs, overall it's going to give you a negative return. But if I trade this cross rates, it can give me a 75% return. So you see, this information is important because then I know how I can assess and move forward. So, okay, and of course we also look at that time. We look at indices. So these are two indices we trade, and if you look at it, it's -9. So then you straight away know that okay, our strategy doesn't perform in indices. Maybe you want to just take away, right? And if you look at commodities, it's giving you about 27%. So maybe our strategies work very well in commodities as well, right? And we also can split it with different strategies, right? Structure setups and pattern setup. Then you can see structure gives us about 8.5, patterns give us 60%. But this is a very surface kind of stats because we need to also assess during that duration that we track, is the market mainly ranging, which this perform, or is the market trending, which structure will perform. But if you look at the hit rate, one is 40, one is about 47. Right? In terms of number of trades, both are similar. Right? So maybe we can assess that during that May period to last year December, a lot of time market are ranging. So that's why this strategy performs very well. Right? Then with this, right, we can also break down like structure. We have 1, 2, 3, 4, and 2, 6, 1, 8. You can see that counter trend gives us negative return, but if you trade with the trend, it gives you 25% return.
261 is it always counter trend?
Not always.
Not always,
yeah. But the concept is based on counter trend.
Okay.
Then if pattern, you look at it, Bat, Gartley, Cypher, Butterfly, you can see that Cypher only gives you the 3%, 3.81%. Then you might want to decide that, oh, maybe this is not worth the time you trading this. Right? And then maybe you want to focus more on your trade in terms of Bat pattern and Gartley pattern.
Majority of them are Cypher pattern.
Huh?
Majority of the patterns are Cypher pattern. Quite a lot there are Cypher pattern.
You mean quite a lot as in what?
I mean, these patterns.
Not really. Based on last year's stats, we take 62 trades on Bat, but only 25 on Cypher.
Okay.
Yeah, so you can, with all the stats, with all this journal, it can help you to make all the statistics.
Okay.
Yeah. So it's not really for us, but it's to help you because it doesn't only give you insights as to how you want to move forward, but it also give you certain conviction and confidence when you face with drawdown.
Okay.
Because you know that this one is is tested with 8 months statistics, right? So maybe now I'm suffering a little bit of drawdown, but I know that it works over a longer period of time. So that also gives you that psychological confidence to continue trading. Yeah. So all these stats are important, and you can only get all the stats when you start to do journaling. Because if you don't do it, you won't have all this information.
I got a question to ask you. You don't mind, just a one. How do you actually get into those COT figures? Can you just show me roughly so that I can do it myself?
The one is the time I show you guys Google but cannot enter. I don't know why. Basically, what I do is
what do you mean cannot enter?
because the time Jess wanted to search for the
Yeah,
website, but
yeah.
she cannot find. Basically, how I do right is I just Google
CF
traders of
COT lah.
commitment of traders.
Yeah,
Commitment of traders
Yes.
report.
Report. Yeah, I did that also. Yeah.
The first one.
Commitment of traders report.
Yeah, you Google that. The first result.
Okay.
Okay. Then. Okay, you don't have to write. It's recorded. You can go and watch.
No. I know. I need to. Okay.
Then after you land this, right, you
Yeah.
go to historical compress.
I did those. Yeah, historical
Okay, then
compress.
you
Yeah.
go all the way down. You focus. You find this futures only report.
Wait, why do you use historical compress? Because yours is the current one. It's not something like history.
COT is always about his history reports. Why we take compress is because we want the Excel file,
Okay.
right? So you go over to this tab, right? Then you go down. There's this futures only report. So you only take the
Wait, which one is
futures
it?
below there. Futures only report.
Yeah, futures only report. Yeah, okay.
Then you go to 2016, which is the current one. Okay, you click
Right.
on this little Excel. Then they will actually prompt you where you want to save. Then you can save it wherever you want to save it. So if I save at desktop, then it will be a zip file, right? Just open up.
Mm.
Okay, so when you open up, it'll be here. This file called NO, you can just open up. Then this is where all the futures report you can get out.
Yeah, but among it, you got wheats and all these soda.
Yeah, so you just want to take the one that you are interested at lah. For example, if you want to track Euro, then you just track Euro. This is Euro. Okay. Okay, it's by alphabet order if I'm not wrong. Then you can go by E. Just now we went through.
Well, you just picking a needle in a haystack, right? How do you do it?
We find it and then establish it. Okay, basically let me just show you how. Cause I already have that out, so I can just control find it.
Oh, okay.
I just clicked the wrong one. Let me just show you. Okay, because I have it here already. Right, I have this. So I can just click, copy this, okay, and then I can go over to DXL and then I just find it. Yeah, so it's here. So I don't have to scroll because I already have the name of this, right? Euro FX. So I can just find it. Control find it. So if you look at this column.
But if you don't have anything, you go and look for it, it will be terrible, right?
Yeah lah, that's the one's first time work. That's when you do it lah. Then after that you can find it. So then you can see lah. This is the date, 10th of May, which is the most recent one. Then you have HIJ column. If you do not know what is it, then you have to like scroll all the way back. See lah.
All the way up again and take a look.
Yeah, then you have like open interest, things like this.
Okay.
Yeah, then open interest, non-commercial, commercial position, everything.
You are taking non-commercial.
Or like, okay, the first step is not straight away start trading. The first step is write out a plan first. But I think a lot of traders start off without a
but
plan.
we trade first.
A lot of traders start off without a plan, but
Yeah.
that's the most crucial part. That means you need to have a plan to
That's why you come here for the cause. Isn't it? That's the reason. I mean, if not, then why you come here for the cause? It's because of this.
Okay, yeah. So go and start off with a plan.
Yeah. I start off, I come back to you.